What's up, my beautiful people? It's your boy Edson back again with another trading breakdown to level up your trading game. In this video, I'm taking you deep into the smart money mindset and showing you how I used a simple, repeatable concept to snipe a current entry on volatility 25-1S index. Whether you are new to the game or deep into the trenches, what I'm about to show you can seriously sharpen your edge. So let's jump into the charts and see how I use this strategy to always get these good entries that you are seeing on the screen. The trade that you're seeing was volatility 25 index and it was taken on the 1 hour time frame. But before we took this entry on the 1 hour time frame, we started to do the analysis on the highest time frame. For me as a day trader, I normally use the daily time frame. That's the highest time frame that I normally go as a day trader. So let us see how the daily time frame in a line to the 1 hour time frame made us enter this trade that you are seeing. It is currently running on a risk reward ratio of 1:6. And I will also explain the psychological impact this trade had on me, because as you can see, as after our take profit, this trade went all the way back to our entry. So we are going to discuss the psychological roller coaster that we encountered in this trade and how you can be strong when you are in your own live trade. So let us go on the daily time frame and see how it made us enter the selling position in a line with the 1 hour entry that we have currently saw. So let us analyze on the daily time frame how this market was moving. So this market on the daily time frame, you can see for yourself that it was moving on a downtrend direction. Like, hey, this market right here, it is currently moving on a downtrend direction, because you can see this market previously it was moving on an uptrend direction. This way you can see the market was providing us with series of higher highs and higher lows, higher highs, higher lows, higher highs, before the market eventually came and broke this structure right here. So again, how can you know if the uptrend direction it is finally over? Beginners traders, make sure you listen to this concept very carefully. You can know if the uptrend direction is over when the market breaks past the previous higher low right here. So you can say for yourself that this market was previously moving on an uptrend direction, but the moment the market broke with full body candlestick, with full force right here, it showed us that this market it is no longer moving on an uptrend direction, and that currently it is moving on a downtrend direction. So we said to ourselves, how is this market currently moving? On the previous videos, we did say that the price always moves towards the liquidity areas. So that means you can see after the break of structure, the market did not come and respect this structural level, but it went down inside this inside formation to get our entries, and you can see it is praying out. That's the theory is saying. All right, so we know right here that this market it is inside this formation to get the liquidity areas before actually moving to the downtrend direction. So we said, okay, this market is currently fetching the liquidity areas, and currently the daily time frame shows in relation to the trend that the market, after collecting the liquidities, it has to sell. So we came on the daily time frame and got this valuable gold-like information. Like the market is correcting liquidity areas, the market has to sell if it has to start moving in series of lower lows and lower highs, because the uptrend direction it is already over. So we say to ourselves, using this information, let us see how we are going to align ourselves with the information that we got on the daily time frame and get a very good selling position. Because hey, everything that you are seeing on the candlesticks charts, they tell a story, and you have to move with logic behind why you are selling or why you are buying. So let us go on the 1 hour time frame and see how the market was moving. This is how you do the top-down analysis. Some people can argue like, Sarah, why should I not start on the 4 hours time frame, or why should I not start on the 8 hours time frame? Hey, you have to know top-down analysis is just like zooming in and zooming out. If the daily time frame it is not showing you something clear, you can say, okay, let us me go to the 8 hours time frame. It's like you're zooming in to see the bigger picture of how the market is moving. So let me zoom out right here on the 1 hour time frame and see how the market is moving. So remember this zone that we marked on the daily time frame. This was the daily liquidity area that it has already been fetched. But another crucial information that you can see right here on the 1 hour time frame is that this market is moving on the uptrend direction. And as the market is moving on the uptrend direction, this uptrend direction, it is not yet consumed, because for this uptrend direction to be completely over, then the previous higher low has to be broken first. But hey, from the daily liquidity area to the 1 hour buying liquidity areas, this is a lot. This is a lot of pips, guys and girls. This is a lot of pips. You cannot say, okay, let me wait for the market to break fast the uptrend direction, and so that I can enter selling positions. You can see right here, it is almost 33,000 points. These guys and girls, it's a lot of pips. You cannot just stay idle and say, let me wait for the shift of the market structure right here. So these are the kind of things that are kind of exceptional when you are trading. So what we said is, we used logic. Okay, we use a logic behind, because we are logical traders. We are trading based on logic, nothing else. That's why you can see I'm not a fan of indicators, because I do not know the reason behind. Because some people can say, for example, when they're trading moving averages, if the moving averages close, then you enter trade. If the moving averages cross below these numbers, you enter buy trades. Like, what's the logic behind for you to actually make those decisions? So I said, no, indicators are not a big deal for me, because I do not know why the market is reacting the way, after those indicators react the way they do on your charts. So the logic behind right here, we said, let us see how the market is going towards the 1 hour liquidity areas. And we said, the market is already moving by providing us with series of lower lows and lower highs. And we said, wow, this is very beautiful. This is very beautiful. Look how the market is moving by providing you with series of lower lows and lower highs. Just a typical way of how the downtrend market moves. So once the market started to provide us with this series of lower lows and lower highs, we said, okay, I know how the downtrend direction market moves, and I know how to get liquidity areas when the market is moving on a downtrend. So we said, okay, where are the liquidity areas on this mini short-term trend that will support us at least to go to the 1 hour's areas of liquidity? So we said to ourselves, the liquidity areas are at this point right here, and we said we are entering this trade confidently at this area, because hey, the whole of this point is a liquidity areas. All of this point is a liquidity areas. So you can never know for sure where the market is going. Sometimes, based on my experience on this pair, sometimes the market cannot go all the way full up right here. So we said, okay, since the whole of this area is our liquidity areas, we are entering at this area right here, because hey, my risk allows me, the size of my capital allows me to hold this risk right here. And they said, okay, it's a perfect place for me to enter on this trade. And the first take profits, as usual, as I've been saying on all of my videos, is you have to take your first take profits on the nearest areas of support or resistance. So we entered our area first take profit at this support right here, and you can see after the market playing around on this support right here, the market came all the way back to our entry right here. But hey, we had no any psychological impact, because hey, we already took our take profits at this area right here, and this take profit was on a risk reward ratio of 1:3, which it's a very good first take profit. 1:3, it's a very good. And since we were very strong match alike on the direction of where this market is going, because the daily time frame it's within our direction, and the 1 hour time frame it's within our direction, we were very confident that hey, we are not moving our stop loss. We already took our first take profit on a risk reward ratio of 1:3, and even if the market comes and retests and goes all the way to our stop loss right here, we will still close this market on a profit. This is just a numbers game, guys and girls. Trading is all about numbers game. So you have to be smart on your decisions, and that's how we did it. Always take your profits on the nearest support or resistance levels, because the market might respect that level